I want to bring in right off the bat here, QI Researcher, CEO and Chief Strategist, Danielle DiMartino Booth. So what, I mean, there was a lot there to digest. I'm taking notes. You don't have the benefit, but what jumped out at you?
The Fed is saying that we're heading straight into stagflation. That's what they're saying. Growth is going to slow, unemployment's going to rise, inflation's going to be much hotter than it is right now. Where they're getting these ideas, I absolutely have no idea, Charles. It's as if they didn't look at the housing data that came out this morning and yesterday.
Yeah, there's a lot of data I don't think they looked at. It felt like not long ago, 4.4 was the unemployment trigger. Like that would have been the number that would have gotten Jay Powell excited. Now they're projecting 4.5%.
They're moving the goalposts.
They're moving the goalposts, and they seem to be somewhat comfortable with it. Is it because it's offset by inflation?
If that gives them comfort, Charles, we're in trouble. I mean, possibly that they can make that their justification. But in this environment, with initial jobless claims pushing up to the highest in the post-pandemic era, as well as continuing jobless claims, they're clearly not making monetary policy for anything else than trying to hurt the current administration.
And of course, you know, and I hate to say it to pick up on that, but it's hard to push back on it. So September of last year, 50 basis points. A lot of people were saying that was to help Joe Biden win the election. I resisted that, right? I thought there were reasons for them to cut it, but it was a big cut, 50 basis. And then even though CPI went up and, you know, they still cut again. And now we've got conditions where unemployment is going to be higher than when they saw. If they saw a sense of urgency at 4.2%, but don't think it's going to be one now, it's tough. And I want to bring up some other charts here because you kind of talked about what we saw just this week, some of the economic data. So what stood out for me is expectations, two ways. Michigan sentiment number, index of consumer expectations up 22% month over month. So people are feeling better about the next six months there. On the other side of that this morning, the Empire Fed numbers, right? Same thing came in. Empire Fed itself fell off a cliff, but if you look at new orders, if you look at employment up, prices down fractionally, but they're going in the right direction. It just feels like, can they hide behind stagflation? How long can they hide behind the fear of stagflation?
I don't think they can. Look, housing is 36% of the CPI. It's coming. House prices are coming down. Apartment rents are coming down. This will feed through, and it has been feeding through into a disinflationary impulse in the CPI that the Fed is absolutely clearly ignoring. And you're looking at the manufacturing side of the state of New York. New York is the biggest services economy in the country. It is the bellwether for the majority of the U.S. economy. And we're seeing serious weakening on the services side of the New York State economy.
I'm going to skip a chart here, folks. Let's bring up the housing starts and permits because that's out this morning. That's fresh data. You alluded to this. You know, this is the primary focus. So again, it's not just the starts down big, but they've been down a lot recently. Permits down, and how important is the housing market for the Federal Reserve?
Housing leads the economy into and out of recession and expansion, period. It is what drives the economy. There's so many people employed in this sector as well, and we're seeing backlogs of housing starts also come down 3 months in a row. That means that demand is not out over the horizon. We've heard the news from Lennar, 13.3% that they spent on average in the most recent quarter on incentives. Home prices are coming down. This is going to translate into fewer construction workers.
You've already mentioned that President Trump's not going to be happy with what he heard. Later on in the show, I want to ask you who might be the next Fed chair.
I've got some answers for you.
I can't. Okay, we'll talk to you in a moment with the panel.